Welcome to TradeTheNBI.com. This is John. This report is for the 5th, and well, like we expected, not a whole lot of anything. You had some of the negative pressures pushing, but again, NASDAQ was clearly stronger overall, and that kept things pretty modest. We still approached all the way up to the 100%. Didn't really change anything about it, but yeah, all fine. But you can see larger short increase because some of the numbers coming out a little softer than they expect, PMI, things like that. But again, this is all part of that transition that we were talking about the other day in the last couple of months, is simply because of the delay of things, and there's just no way around that. It's going to take what it takes. You can't just pop into a disaster and think you're going to recover in a couple of months. It hasn't been that many months. That's the thing. You can, so far the attempts are in the right direction, but will it follow through? Will they pass a budget that just adds more to the deficit and everything? Who knows? But again, they're not dealing with some of the systemic problems, just trying to do, what little band-aids they can. So there was the NASDAQ moving forward and much cleaner from that standpoint, and still cyan under red, but you can see from the comparison of the DOC of the S&P, very different. You already had the crossover switch, so obviously there's going to be more pressure on the S&P relative to the downside than it is for the Nasdaq. But you can also see that the new fund money applying in. Of course, those weaker details moving Treasury yields lower. Will the Fed step in at any point in this? That doesn't look like it. So that's an interesting one. It's just crazy to see how active they were just 8 months ago to like completely off the grid since January. Strange. From an oil standpoint, that softness also taking some pressure off, and you finally see an MBI white spike here coming through. So potentially that is your signal if Magenta is able to dip there, that would see a little bit of oil fade off. Still, though, you got shakeout with the rising gold. It's always problematic, so I don't expect it to do much, but just more of a sideways pressure. From a euro standpoint, again, still floating high. Everything's wonderful in the Eurozone despite negative growth, the whole 9 yards. It doesn't really make any difference. It's all about the dollar and their expectation of what's going to happen with the U.S. Trade situation in another couple of months, and that's what they're really hoping for, is some kind of supply disruptions, that kind of breakup that will cause a backpedaling on the tariff configuration and that. And some people are trying to bide their time, and that's what the EU did by getting the extension. It just helps them. They can keep going is what their plan will be. I'm certain of it. But gold, yeah, continuing its elevation. You still have these existential tensions in the world. Obviously, there's far more diplomacy taking place now between Russia and the U.S. than there had been, but there's still a lot of uncertainty, especially with some of the behaviors of Ukraine. You can see the desperation there. Starting to do things that are a little more not what we would typically think of as traditional warfare. How far that escalates, especially with today's technologies and drones, and that gets to be interesting. Bitcoin's still holding on despite this incredible weakness here. But if you get a turnaround here from Magenta, which is pretty darn close, could see some improvement. We got a full reset, so it's not as though there aren't capability of buyers. You're still a positive shakeout. So slight uptick on checkout there, and you would expect to move back towards the 100% and maybe even new highs. And of course, not impacted at this particular stage has been ETH. So relatively speaking, they finally are starting to even out some, even though the trading of it is very different. You can see it was pretty much just a blasé, choppy day. Then we ended up with a little bit of a spike coming down, and we're at a full reset. So we're just kind of in that big players really haven't finalized how things are going to go, but you can see that there's been an accumulation at this, and every time it gets to that near 76, there's been buying to support things. So that to me is a signal that I think the potential is there for a pop from where we're at this particular stage. And from a 5-minute chart here, you can see that there's just a lot of that option. You get the call buying, you get put selling, and then you flip around and you cancel out both of them, and it just becomes a gamma play. What we can see here in the post market here is the dip that we had before cleared out and filling back in some of that. So that will be interesting coming towards our open in the U.S. I think that we're just going to see more of that upside pressure build, because the softer things get, the more it looks like the Fed may have to act. And from a market standpoint, that would be a dream come true. They would be thrilled. So that's what they're hoping for. Whether they'll get any action from this Fed, who knows now. So we'll just continue to follow the readings and go from there. As always, though, trade well. Anything relevant, I'll put it on our team chat. Have a good one.